Hi, I hope everyone is doing okay out there. These are some tough times that we're dealing with right now, so we just have to take it one day at a time. And hopefully, you personally are not dealing with the COVID-19 illness or know anybody close to you that is. Unfortunately, I have some very close friends that are fighting it right now, and keeping them in my thoughts and prayers. So let's talk a little bit about where we're at from a real estate standpoint with the pandemic that's going on. I spoke a few weeks back about the importance of having an emergency fund. For some people, you're really seeing that up close and personal right now. If you were living paycheck to paycheck, or if you were depending solely on credit, and all of a sudden your income is either reduced or diminished entirely, then I know that you're hurting right now. So, an emergency fund may not be something that is even a topic of discussion right now. But for those that have mortgages and no emergency fund, this information will allow you to look a little bit deeper into this. With the stimulus package that the federal government is offering, it has prompted a lot of the banks to also follow suit and offer relief to mortgagees. Bank of America, on their website, you can apply online to have your mortgage payment in forbearance. So what they will do is allow you 2 to 3 months of not having to pay the mortgage, and then they're giving the option of bringing it current within the immediate future after that, or adding it to the end of your mortgage commitment. So, for example, let's just say you have 5 years left of your mortgage loan, which would equal 60 months. You would then have 63 months left. Okay, and you would go 3 months without making a payment, but just tack it on to the end. So that's the type of forbearances that they're offering some borrowers. Chase Bank is doing the same exact thing, but instead of their application for it being online, you can actually call their mortgage support line. That phone number appears on your mortgage statement. Okay, and you can actually just key in information and they will do it just from the automated phone. Wells Fargo, they have an online message center that allows you to email them through that message center, and you can do your request there. Their turnaround time is about 48 to 72 hours, and they'll let you know if you qualify. But so far, I've gotten very good feedback, and I've had great feedback from my own personal situation as well. Some of the smaller banks like Home Point, Ocwen, Select Portfolio, and some of the credit unions that are portfolio lenders have not been operating the same as what the larger commercial banks have been offering or operating, but you can request modifications through them. And I would say give them a call, find out what they do, because I don't have the information for every single institution, but it's, for the most part, works a little bit different with the smaller institutions than it does with commercial banks. But I would be really pleased to hear your feedback if you happen to be a mortgagee holder of a loan that is with the credit union. Okay. Also, automobile lease companies such as Mercedes-Benz Financial and Hyundai Financial, and also Toyota Financial, are also very cooperative with giving you an extension on your lease and taking the next 2 to 3 payments that were due and putting them on the end of your lease. Okay, so I would love for you guys to give me feedback on what you're experiencing with your own personal automobile and home. Kind of revisiting a topic that I talked about a few weeks ago is with an emergency fund. If you don't have an emergency fund, then obviously now is not really the time for you to be thinking about it if you're not working or have income coming in. But if your income has not been affected by what's going on, you can still work on putting your emergency fund together right now by starting with getting some of your payments deferred, which would allow you more liquidity at this time. Okay. The next thing I wanted to talk about is a lot of people have been emailing, calling me, and texting me, and they tend to refer to this housing crisis right now the same as what happened in 2008. Let's first start out by saying that the events going on right now is not a housing crisis. We have a health crisis that's going on right now that is taking an effect on everything financial, from the stock market to real estate, because everything is at a standstill. So let's kind of compare it with what happened in 2006 to 2008. Those people that were foreclosed on, lost their homes, were unable to refinance. It was really due to an economic slowdown caused by the collapsing real estate market and a mortgage meltdown. It was the demise of subprime loans and what they would call the pick a payment or option arm loans that automatically became adjustable all of a sudden, and people were not able to get out of those and therefore could not afford the payment. So it's a completely different ballgame right now than what happened in 2006 to 2008. Economists right now are comparing what we're going through right now more so to what happened in the dot-com crash, which was in the early 2000s. That was immediately followed by the uneventful 9/11. So those are what we're really comparing it to, and economists are comparing it to, because of the fact that it was like an instant shock that generated fear and anxiety amongst the general public. I'm reading a little bit from some of my sources here online. People avoided crowds. They believed that there was a terrorist attack coming, and they were acting the same way as they're acting right now, trying to avoid being sick and avoid exposure. The same parts of the economy then are under pressure right now, such as the airlines, leisure, hospitality, restaurants, entertainment, consumer discretionary services in general were limited at that time. And that's what we're experiencing right now. So let's take a look at what happened back then. The S&P dropped 45% between September 2000 and October 2002. Home prices, on the other hand, appreciated immediately during and after that crisis. The stock market correction proved not to have any negative impact on home values. So what I think we're going to see right now, just from my experience and the information I'm receiving from the sources that I hold dear, is that you are going to see a slowdown. People that have to sell may be in a position to lower their prices right now, and there's going to be less buyers competing in the marketplace. But as far as it going belly up and everyone losing their home and it's going to be foreclosures galore, I'm not seeing any indication of that, not locally here in the state of California. So let's be patient. This is an anomaly. We're going to take one day at a time. We're going to give out information as we receive it and compare it to what's going on in the marketplace and go from there. Okay, if you have any questions beyond what was discussed today, please give me a call. My number is posted on my Facebook page and also on my YouTube page, and you can Google me, Jamie Durity, www.jamiedurity.com, and you can get my information if you want to call me directly. Thank you so much for tuning in, and I will be back with you within the next week to give you another update.